Good morning, traders. This is Brad Matheny. Today is the 28th of December, and I'm coming to you this morning to let you know that I believe the U.S. markets and global markets are actively establishing a base and or bottom down near this area, and they may drop a little further. They may drop, let me try to give you an idea here, maybe another 8, 9, 10%. Into this area, 7%, but long and short of it is I believe the U.S. markets and global markets have unwound the excesses from the COVID bubble. You can see here, this is a quarterly chart. You can see this is 2018, 19, 20, and then we get the COVID burst, the speculative bubble. Then we get this massive unwinding phase, and we're right back down into standard deviation channels, right at a 100% extension from the 2016 lows. Actually, can move this down just a little bit. There we go. To the 2018 highs, which puts us right above the COVID highs. Actually, I can move this a little bit over to here. And we are right at this standard deviation channel center line. Now, we could break a little below down here into this green area, maybe another 6 or 7% lower. But the reflation trade here, back up into this moderate upward channel, puts us in a very clean upper 20-30% reflation trade up into this area, and I'll drag this over so you can see. This puts us in a positive 35% possible reflation trade in 2023, quite possibly moving up into this area, which could put us up into a 60-70% reflation trade in 2023. Now, what leads me to this? What leads me to this conclusion? Well, I do a lot of research. I do a lot of financial modeling, and I think we're headed into an extension here. This is an SPX chart, and it's the reason I'm using it is it's clean. If I take a look at Fibonacci extension, in fact, let me come in here and hide this one. There we go. If I do a Fibonacci extension from these lows going all the way back here to the 1981 basing bottoming formation, in fact, I could go back a little further. Let's just leave it here for now. That's pretty close to a base bottom. You can see how cleanly it aligns. Let me come in here and show you. You can see that this expansion from 1981, 82, all the way up here to 1999, moving back down to the lows over here in 2009, moves very cleanly. A 618 expansion is right at this peak level here, so it's perfect. A 1.0 expansion is right at these 2015-16 highs, which is, in my opinion, perfect. A 1.618 level happens right before the 2018 peak, which again, in my opinion, is very, very clean. And then we have the let me double click here. We have the 2.618 expansion right here in red, right over here, up near these excess peak area. And this rally represented a move that's roughly, trying to get this as accurate as I can, that's roughly 4,091 points in the SPY. This is a big move from 2009 all the way up, Fed-induced massive rally. I'm counting this as again, a wave 4 expansion. So we have basically an A, B, and then we have a C, which goes A, B, C, D. Now we're looking at a wave 5 rally up to the upside. I believe this new wave 5 rally, this basing and bottoming that's going to occur in this channel, and remember, this channel here, this green channel here, is very, very important. This is long-term critical support. So basically, two things, very, very important to understand. We've got a very strong, this is again a quarterly chart, we've got a very strong base and bottom setting up here for the last quarter of this year. We need to see this level hold. This is a very critical level for the market going forward. We still could have some basing and bottoming formation here, but I believe we're going to see a new rally come out of this, a new reflation rally, and eventually before 2026, 2027, we're going to see this up at new all-time highs trying to complete wave 5. And that's why I believe this support channel right now is really critical. This is very important to understand the growth that's taking place with regards to the Federal Central Bank printing trillions and trillions of dollars after the 2008-2009 collapse. You need to understand that the global economy has been pumped full of capital. We had this excess phase. We've wiped out the excesses. And again, I can show you that very cleanly right over here. How much have we wiped out the excesses? Look at this monthly chart. Look at these excesses. Okay, we go back to 2016-17. This is a combination of, and you can do this on your own, this is Tesla, ARKK, ARKW, ARKQ, and GME. I wanted to pick some highly volatile, strong technology stocks to show how much this excess has actually unwound. So now you can see that we're in the same scenario. SPX has moved into this standard deviation channel right to these center line areas. This system, this custom index I call it, has moved into this standard deviation channel. We've reached these lows. These are historical, very strong lows. We may have a 6 or 7% downside risk here, but I believe we're going to be looking at a major bottom. I believe this is what's going to happen. So we're going to see this move into a kind of a basing bottoming formation and then reflate back out into 2023 and 2024. Possibly looking at a massive 50, 60, 70% reflation going forward. When we come over here and take a look at the SPX, if we were to get the same type of reflation, you can see we've already moved up, but from these lows, if we were to see the same type of reflation, we'd be looking at something like this on the SPX. And this would reflect a, from these lows up to here. Let's take a look at it. Try to get the, there we go. Percent distance, we'd be looking at a 30 to 35% reflation moving back to all-time highs or close to all-time highs. But then where do we go from there? Oh my gosh, this is where it gets really interesting. Okay, so now we shrink this back down. We take a measurement of this move, and I'll do it again right here. I will clone it. And again, I'm using eSignal to show you what's going on, but if we take from these lows roughly and take the exact same clone, we end up here, okay, at 76, 78 roughly. Understand that that's highly unlikely to see a full 100% move here with wave 5. Could happen. It's not uncommon for wave 5 to move longer than wave 3. Well, it is somewhat uncommon, but it can happen. My opinion is we're going to this 618 level. Let me show it to you. And this is why, where is it? There it is. This is why I believe we've reached a bottom. See this green dash line here, or this 1.5 area? Ladies and gentlemen, this is the next reflation trade right here. And that would mean from current lows, we are looking at a reflation trade of 65% roughly, call it 55 to 65% up into, on the SPX, up into 6,000 to 63.15 roughly, and that's going to be a 2,500 point rally from these current lows. And I believe that we are setting up one of the biggest opportunities of our lifetime right now. We have seen historically, and I'll come back over here, we have seen historically these deeper double bottoms. So I'm going to try to draw on this. Let me come over here and spread this out. And I want to show you what is called failure of excess phase peak patterns. So I'm going to show you here how we get a, let me go to monthly, get a little more detail, and then I'm going to try to show you what's going on as clearly as possible. Okay, so we get these types of excess phase peak patterns where we get an extreme rally, we reach a peak, we come down, we set up a base, then we start flagging. Now ideally through this flag we should do one of two things. We should either break downward, establish a new base, roll across this base for a period, and then attempt to break downward. That's what an excess phase peak actually does. We have the A pattern here, we have the B pattern here, and of course my B is going to look sucky. We have the C pattern here, we have the D pattern here, and then we have the E pattern here, which attempts to break down to a lower low. Okay, so we'll get rid of this. Bear with me as I get rid of my drawing. So I'll leave this here so you can see what an excess phase peak pattern actually looks like. But now, if the flagging formation, or if we get a failed breakout here, where we do not move into this E pattern, so ideally we could see this rally, continue to move higher, and then attempt to rally to new highs, or we could see it move slightly lower, base bottom, and then continue to new highs. So in this case, we had an excess phase peak pattern. It established a base. It started to flag out. The flag eventually reached new all-time highs. Then we rolled into another one. Then we flagged out here, reached new all-time highs again. End of an excess phase peak pattern. Now, as we move back over here, you can see that we had, let me move over here, you can see that we had this roll here, another excess phase peak pattern. We came down, we flagged, we broke downward right here on the flag, we failed, we rallied back up, we took out this high, start of a new rally right here. Okay, next, we come across these areas. We have excess phase peak pattern here, rally up, flag out, takes out new highs, we're back in an uptrend. Come up here, rally, flags out, breaks to new highs, we're back in an uptrend. Comes over here, rallies, flags out, breaks to new highs, we're in an uptrend. Now, finally, we get this rotation, we get this downside move, we get our flag, we break to the downside, we set up a new low, this becomes level 4 on the flag formation, and then we break to the downside, which is the roll out to the absolute bottom. Okay, now we move a little bit higher, we come back up to this area, we flag, whoops, we come up to this area, we flag out, we break downward to a new low, we establish our base, this is our wave 4, then we roll downward to an ultimate bottom. Now what's really interesting about this particular pattern, this particular setup, is that this is a broad formation of an excess phase peak. Now when you take a look at it, we have this massive rally coming into this massive flag, coming down to this extended wave 4 base, and then we rally back out of it, back to the upside, which again sets up a series of new excess phase peaks. We come in here, we get an excess phase peak, we start flagging, we move to an upside. We get a new excess phase peak, we start flagging, we move to the upside, meaning we're confirmation. Now we get another little flagging here, we reach new all-time highs again, back into bullish trending. And this continues. Failure of excess phase peak patterns continues. Here's a great example. Well, let me spread it out a little bit. Here is a great example of a massive excess phase peak in 2015-16. We rally up, we flag, we break down, establish level 4. Level 4 becomes our critical level. This means that if we get below this level, it's going downward. If we stay above this level, it's going to continue to move higher. And once we get above this previous peak level right here, we're back in an uptrend. Now, let's just kind of skip all the way across, and there's multiple flags here. So again, here's the excess phase peak, flagging. We got to a new high, rolled down, flagging again, got to a new high, come back in, flagging again, never got to a new high, come back up here, and now we're in this flagging formation. We are going to flag out. If we get a rollover, if we get a move back down into this level, then we will likely establish a level 4 critical support. That will be the ultimate bottom. If we do not get the flagging formation and the breakdown of the flag and come down here to this level, then we are going to move into a solid upward trend all the way through here, targeting these upward channels. Now, when we get to these upward channels, remember, we're talking about moving all the way up to this area eventually for some sort of a peak before 2026 or 2027. So we have an excellent opportunity right now to start addressing the possibility that the ultimate doomsayer cycle is not going to come true, that the Fed is going to shift into a more adaptive mode. The global central banks are going to move into an adaptive mode. They are not going to push the world into an economy. Now, here's the summary of what I believe is going to happen. I believe you're going to see technology stocks reflate, possibly 25 to 45% throughout the globe. I believe you're going to see consumer staples reflate. I think biotech, healthcare, raw materials, for example, commodities, possibly oil, gold, silver. We've got to wait for these. I believe initially you're going to see consumer staples, which, remember, those are going to be like the utilities, the healthcare, the biotech, the defense, aerospace, toothpaste, toilet paper, paper towels kind of stocks. Those are going to be the ones that reflate. Then you're going to get into kind of a speculative phase where almost everything will reflate. And that's probably going to come near the end of 2023, early 2024. You need to prepare for it. And that's why we're kind of watching this symbol, Tesla, ARKK, ARKQ. This is a monthly chart. Oops, I don't want that. And in reality, ladies and gentlemen, if we were to try to understand this cycle phase, we would be really looking for a moderate reflation back into this area, into the end of 2023, maybe something like this, and then into more of a reflation trade like this into 2024 and 2025. We could see it move, up into this area, stall, and then back into some sort of a reflation mode. But understand, I believe that this level here is showing us that we've moved into an extreme, undervalued, deflationary trend, and I believe that we are going to be looking at a reversion trade into early 2023 and 2024. And I believe the same thing is setting up right here. We've come down into a standard deviation channel, reaching support. We've rolled over, flagged out, and I believe we're going to see a surprise move. Now, lastly, I want to let you know that the Fed could reflate the rally by moving interest rates down, say, 50 basis points, 100 basis points, maybe a little more, could start to reflate the rally. There will be a wave of bankruptcies, personal and corporate. You will see some deflation still playing out over the next 10 to 12 months, maybe a little longer. You will see house prices continue to deflate and foreclosures to become an issue. The Fed is going to keep the pressure on inflation, and that could be a 4 to 5 year cycle. But understand that I believe we are moving into a base, a bottom. I believe we are going to see another rally phase up to the upside unless something major disrupts the global economy. And understand that would have to be in excess of, something like a 10 to 15 trillion dollar disruption. It would have to be more of a global financial crisis to take place. Otherwise, we're going up to wave 5 right here. Somewhere up in this area and somewhere close to 2028, 2029. So let me try to draw that. 2027, I'll draw it like this. So this is more of so somewhere out in this area. This is where we start to run into some real major concerns. So we got into this area and we started to reflate. We could see it kind of go like this. And then over in this area, we're going to see some sort of a major concern. 2027, 28, 29, 30. That's where we start to get into a major cycle event that's taking place. In the meantime, I believe we have a minimum of at least 65%, 60 to 65% to the upside. The target on the SPX is going to be 6350 roughly. Let's call it 66,000 to 6350 on the SPX. And that's over the next 4.5, 5 years. So we have a window between 2023, 4, 5, 6, 7. So 2023, 4, 5, 6, 7. Yeah, roughly 4.5, 5 years. And that's my news for today. We are going to see, in my opinion, this base bottom happen. Now, I will highlight again that we are very likely, and again, I will point this out, we are very likely to see a bit of a struggle in this area over the next 30, 60 days before we start to find some sort of a base or bottom. I believe we've already established the base. I believe this was it. We could see the markets roll back another 5, 6, 7, 8% lower, potentially before coming off of these bottoms and attempt to move higher. But I believe it's going to happen. I believe we've unwound the excesses. The Fed has already stomped on inflation sufficiently to be able to move us into a reflation trade, and this means we need to start to prepare for what seems improbable, but a rally to new highs going forward. All right, guys, follow my research. Follow me on Twitter. Go to MENT.com and learn how my research plays and how you can use it to your advantage. I have a ton of tools for you, and I'm getting ready to make some big changes in 2023. Remember, you're hearing this probably first from me. Everybody else, it seems like, is uber bearish and expecting the markets to collapse. I have stated a caveat. If we get below this level out here, if we see this roll around and establish a base level here off of this flagging formation, this would put us into a new wave 4 scenario. We need to move away from, and I'm going to draw it for you right here. This is our base. This appears to be our flag going forward. No, I didn't want that. There we go. This is our base. This is our flag. And what we're looking for, ladies and gentlemen, I'm going to draw this in a different color, bright pink color, make it thicker. This is our flag, okay? And let me see if I have this one, bright pink color. Try to make it as big and clear for you as possible. This is our flag. Let me get rid of all of these lines. Keep that one. Get rid of that. Get rid of that. I'll keep that. Okay, so here is our flag. These pink lines represent our flag formation. We would likely see this continue to move upward if we're going to reflate into these highs up in this area. Otherwise, what we will get is we will see this flag up. roll over down to this area possibly, form some sort of a base, maybe move sideways for many months, and then break downward. This is the real risk right now of a downside move. This is our upside base flag, which may continue to extend higher into new support channels, into new all-time highs, and that's why I'm telling you I believe we've actually based out here. I believe we're going to continue to rally forward. We would need to see something break this channel in order to really produce any greater concern. We've seen historically, remember I've drawn all of these for you back here, and I cannot explain in any more detail that this pattern consistently flags out and rallies higher. Psychologically, traders, investors, the world, pretty much everybody is 85-90% planning on growth, profits, functional business opportunity, functional economy, and upward growth and appreciation in prices. So you need to understand that betting that we're going to see some massive global collapse is a very low probability bet. And I want you to be aware that this is going to happen. In my opinion, we're already setting it up. We have a roughly an 85-90% chance that we're going to see an upside move out of this. We've got probably a 10-15% chance that we're going to see a big downside move. And that would come only if there's some massive contagion event that takes place to disrupt the world, which right now I don't see happening. Global world war, massive financial collapse, a massive population disruption, meaning a massive, virus or pandemic or something that wipes out 30, 40, 50% of the world population. That could send the markets into a downward cycle. But unless we get something like that, we're going to resolve this to the upside, and I need you to be aware that I think we've already unwound the excesses. And this is a great chart to highlight that we've already unwound the excesses. It's, whoops, did it again. This is a wonderful chart to point out the fact that we have seen this speculative bubble. We've unwound. We're very, very close to a base and a bottom. And the reflation trade here, even though it may not be back up to these areas, could still rally from this 44, 45 area up into this 80, 90 area, which would be essentially a 100% rebound. And we are sitting at the precipice, the apex of this base bottom move right now. My advice, again, what I'm doing, I should say, is I'm looking to start taking token, small, what I call anchor positions in certain stocks, realizing that this opportunity exists and I may be able to add to them over time, over the next 2, 3, 4 years as needed to capture this move. I will keep you abreast when we start to get up into excesses, but for right now, we're looking like a base bottom formation is setting up, and this is a great time to be aware of the markets and what's actually taking place as the markets transition. All right, guys, follow me on MENT.com and go see what I'm doing. I'm trying to help you prepare for and grow your wealth. We have been safely immune from this risk since June, July, August, back over here in 2021. We've been sitting primarily in cash all the way down. Now we're going to start to get a little bit more aggressive with deployment of capital, trying to ride out this base bottom and watch for the reflation trade, which should be very, very profitable. All right, guys, Happy New Year. This is going to be a great 2023 and 2024.